start off with earnings first, because we've got so much from the banks today. What do you make of it all so far?
Yeah, morning, Angeline. It's been a mixed reporting season in Europe, much more mixed than in the US, and I guess that's a reflection of our more fledgling economic recovery over here, and also the fact that the corporate sector over here obviously has, relatively speaking, a lot more emerging market exposure, and that's been a bit more of a mixed blessing. And if you look at today's results, you mentioned in the headlines that Peugeot is a good example of this. Their Chinese exposure has been dreadful for them this quarter, and it looks like the reason for, or some of the reason for the guidance, the soft guidance going forward. But Nestle did a bit better. In terms of the banks, it's quite interesting. I think you saw in Lloyds results falling impairments, and that's something that we would expect to be a positive tailwind for earnings for the whole European banking sector this year. If we follow what happened in the US when impairments fell by some 40% over the post-crisis. That's provided a significant tailwind for earnings over there, and we'd hope the same over here.
Okay, let's talk about emerging markets, because you touched on that when you talked about Nestle. We've seen a lot of turmoil beginning of this year. It seems to have stabilized somewhat. Is the worst over? Are we going to see that return to the fore again?
It's very difficult to say with any great confidence, as you'd probably expect me to say. There's a lot of people, who are sort of reading echoes of the late 90s in what we're seeing at the moment. We would say that in aggregate there's significant enough differences between now and the late 90s and a lot of the sort of current account situations, in the aggregate current account situation that you're seeing in a lot of the emerging markets. But definitely, as China's sort of resource hunger slows, as is inevitable, a lot of those countries supplying into that resource boom, they look like they haven't been looking after their domestic affairs as carefully as they should have been.
And of course, the other thing, Will, that the markets are looking at now is this new debt ceiling timeline. I believe it ends in March. Are we going to see the same kind of turmoil that we saw in the markets, last year happening again?
Yeah, it's impossible to rule out, but certainly the congressional backdrop looks a lot less fractious than it did over the last couple of years, and that's really because the fiscal situation looks a lot less worrying. As we suspected, for some time that the economists have been underestimating how quickly these deficits fall, just as the economy starts to recover, because tax receipts always rise much quicker than us, the gloomy economists seem to suspect. And I think as the U.S. economy continues to recover, and I think we may still be underestimating the pace of that recovery, it feels like the congressional backdrop will continue to be relatively calmer. And I guess also the fact that we've got midterms coming up at the end of the year means that the Republicans are going to have to be fairly cautious about which battles they choose to fight.